Okay, it is 6:02. We'll call the meeting of October 15th to order. Steve, if you would do roll call.
Chairman Beecham.
Here.
Robin. Here. Cadwalder.
Here.
Crawford. Here.
And Jeff Dickerman called in and said he would be late. I know that his father-in-law's having some issues, health issues. Approval of the agenda. Any changes or anything?
No.
I would entertain a motion to approve the agenda as presented.
So moved.
Support.
It's been moved and supported. Any further discussion? Hearing none, all those in favor signify by saying aye. Aye. Opposed? Motion carried. Approval of the minutes. Okay.
Which one?
We're gonna go through them each
Okay.
individually. September 9th, 2020, special board meeting.
I'd like to move to approve the September 9th special board meeting.
I'll support.
Okay, it's been moved and supported. Any further discussion? Hearing none, all those in favor signify by saying aye. Aye. Opposed? Motion carried. September 10th, 2020, regular board meeting.
I was gonna say, I'll take them all.
Okay,
I move to approve September 10th regular board meeting.
okay,
Support.
okay, it's been moved and supported. No further discussion. All those in favor signify by saying aye. Opposed? Motion carried.
I'd like to move to approve of the minutes for the September 29th special board meeting.
There's actually two of them on that. That
Oh,
was the,
there is another
that
one,
was the
yes.
morning interview and the afternoon interview.
And there
I
was
think we
two.
can do both of those together.
Okay, I'd like to move for approval of the minutes for the two September 29th special board meetings.
I'll support.
It's been moved and supported. Any further discussion? Hearing none, all those in favor signify by saying aye. Aye.
I'd like to move.
Opposed? Motion carried. Okay,
I'd like to move to approve of the September 30th special board meeting minutes.
okay.
Support.
It's been moved and supported. Any further discussion? All those in favor signify by saying aye.
Aye.
Aye. Opposed? Motion carried.
I'd like to move to support or approval of the September 30th closed session meeting minutes. There's no minutes with that, was that? Closed session meeting minutes? Okay.
I'll support.
Okay, it's been moved and supported. Any further discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Opposed? Motion carried. One more.
This was in the revised packet.
Okay.
Sharon got these
I
done,
didn't
so
see
we
it.
thought we'd throw them in here.
I'd like to move to approve the October 12th, 2020 special board meetings minutes.
No support. My hand for
Okay, any further discussion? Hearing none, all those in favor signify by saying aye. Opposed? Motion carried. Quite a few of them. See, that's what happens when you're,
Normally, we don't need a consent
Yeah.
agenda, but this
Yeah.
would have been the one time that would have
Yeah.
been helpful.
okay, public comment. Any public, any comments for anything not on the agenda? Hearing nothing, we'll move on to action items. Steve?
First action item this evening is the Showboat Committee Benevolence request. Jim Salzweedl, who's in attendance with us this evening, called me over the past month and asked about Lowell Light and Power's benevolence policy. I sent him the policy, and I understand either talked and or dropped off just different material to Perry. So Perry asked that I add this item to the agenda. This is really a board and public decision. There is money in the benevolence fund every year, and we've done this with From and the Chamber of Commerce and Pink Arrow and Rotary in the past who have came to us. So I want to turn it over to Perry and I guess Mark and Jim, the fundraising committee, for this agenda item.
Yeah, well, thank you for, go ahead.
Go ahead.
Thank you for having us. I'm Jim Salzweedl, I live at 505 North Jefferson. I, along with Mark, are a few of our members that are currently soliciting funds to help finish the Showboat. And with that in mind, I have read what you had sent me. It was not a pleasure reading, but I tried to understand it the best I could, but in layman terms. But I know there's a limitation to what you can do into that part of it, but myself and Mark, we feel that this is such a large thing moving the community forward that I personally would like to see if you could grant additional funding besides what you have set aside for normal times. And I don't feel that this is a normal thing as we try to get this moving forward to help the city and do what we need to do. With that said, Mark, did you want to add anything extra to it? I mean, you've been spearheading as far as our committee goes, and you know, we have a lot of work to do ahead of us to get to that goal where we can finish not just the Showboat, but the restrooms and everything else that needs to go. So we really would love to have Low Light Power be a big part of that and part of our success of raising those funds. As you can see in the package, there were some special things that you could do to put your name on it and
I
give
have a
other
packet here if you want to.
considerations on that part. I have another one here if somebody else would like to view that as well too, as you're looking at that part of it. It's not always easy to come and ask for funds, but I feel it's worth every effort that we come out and see what we can do to get the most. And we love Low Light Power to be a big part of that celebration when we're all said and done.
So, I have just a couple questions, and I don't know if this is the appropriate time or not. So, that's the shell that we see.
Yes, sir.
There's a lot of construction that has to take place inside,
That is correct.
walls and everything.
That's correct.
So I know the numbers that was thrown out previously. Are we still at that kind of number? And the reason why I'm asking that is, in the you know, I have a floor covering business, but so I'm kind of in the construction world. And an example, OSB 7/16, which usually is around $7-8 a board, you know, fluctuates. Currently is at 3 days ago was at $22. I mean, it's almost 3 times the cost of what normal is. Are you expecting those? So the amount, are you expecting that you're gonna have to raise 3 times the amount, or a number higher than what what's been in the paper? Because of, I anticipate lumber to continue to go out of sight because of not because of the raw materials, but because of the demand with the hurricanes and with the fires out west.
Well, I don't know that we're the right people to ask that question to, because we're not in charge of the construction
Okay.
project. But I will say this, Wolverine Worldwide is locked in to a contract to finish that boat for $1.4 million. And as far as I know, that's what they signed up for, and that's what they need to deliver.
Okay, I didn't know if you,
Well, I do agree with you on a piece of lumber. I had to buy some laminate treated lumber, and it was almost 2.5 times what I paid for it just a month ago even at
Right.
that price. It's continuing to go up. And there is a shortage.
I don't know about the, so we have done some monetary benevolence, but the majority of most of our benevolence is been in services. And again, and again, with the amount, do you want, for the public, do you want to discuss, would you discuss the, what currently is in our policy?
I did include the policy in your packet.
Right,
It's on the screen. As written, it states that the benevolence shall not exceed in aggregate $5,000 per year and no more than $1,000 per organization in a 1-year period, to simplify it.
And something that I was just trying to think outside the box, how Lowell Light and Power could help. You know, Pink Arrow does, the Main Street puts banners up. There's 63 poles, and we do it a little bit different. Instead of having something two-sided, we, individuals buy banners, and we sometimes put them back to back, so that ends up being, instead of 63 potential spots that we can put that, it's 126. We typically, the first year that they go up, it's $200 to get involved with that, and approximate cost is $100 in the making of those. We have them done locally by Hoover Printing. And again, I was just trying to think outside the box how, you know, the Showboat committee or whatever could utilize something like that, and then Lowell Light and Power could donate their services to putting them up, and it generates anywhere, each year, generates between $6,000 and $12,000, depending on how many go up. And again, as a business, I certainly would purchase a banner, and again, I love seeing the banners on Main Street. And I know the Pink Arrow ones are coming down, and would love to see something else go up. And again, just thinking outside the box, how could because I personally am not in favor of cash, benevolence, just handing cash out. Whereas if our guys or company can be of service, I'm all in favor of that. And so I was just trying to come up, thinking outside the box, how could Light and Power assist, do that, and create more than, you know, again, with our policy is, certainly we could vote and write a check for $1,000. I'm not in favor of changing our policy, and so therefore I was trying to think of how we could help with that, and that was just a suggestion.
Yeah, I know you and I had that conversation, Perry, and I did go back and talk to Liz about that, and I like the idea of the banners to help offset future income that's going to be required years 2, 3, 5, all the way through it. It definitely would help getting those banners, and it'd be great to use the Low Light Power to come in and hang those, whatever we could do it. And again, when would you put them up? Would you put up at a Christmas festival? Well, you got banners up, then you mess with the lights, and maybe it's the fall time. So we could look at circulating at different events as occurs through the city. But that's a nice gesture for years to come. But where we need it is today. We need to have an influx of cash today to move forward, so we can do those things in the future and utilize your services. And that's the way I look at it. And I mean, if it's 1,000, it's better than nothing. If it's more, I know it's a board decision, but that's what we would like to do today, and then we can work on the other issues later as we move forward and can finish it, and hopefully it's the pride of the community, and it starts paying for itself, and you're going to see that as hopefully thousands of people come in to use it as an entertainment and support it in the holidays, and get it back to what it was a few years back even. So that's where I personally stand. I think some of the boards stand that same way too. That's what we need today. So that's what I'm going to ask for. So whatever that is.
Is it, I don't know if that's probably not appropriate, that I didn't, is this, because we're an entity of the city or whatever, is the council or the city contributing to the, making a cash donation?
I think we have, I will verify that, Perry. There was a $25,000 that we put to something, but I don't remember what that was. It could have been that.
It was a $25,000, excuse me, $25,000, well, more than $25,000. Let me, sure, let me, hang on. I got the number right in front of me. Let me find the right line. Actually, it was $50,000 that passed through the city, that was given to the city from an estate, and the city pushed that towards the Showboat.
So it was a gift from something
state.
to the city, and then the city
Right.
turned it over.
But
To
I
the
thought
Showboat.
I thought we had done something before that, just to get the fluctuating going, but I will verify that,
There
Perry.
you go.
I don't know.
Okay,
Yeah.
You know, what Jim is saying is absolutely true. This is a $3.6 million project. We've got well over 80% of it is already funded, but it's going to take everybody contributing to finish this job. We need the $1,000 or more if you can spare it, and maybe down the road, we still need the banners. It's a collaborative effort. It's a huge, huge icon in our community sitting across the river. So we all need to support it, and that's how we're gonna get the job done. So,
And a lot of us will support it because we're down there entertaining ourselves and being part of it. So I know that part of it, and every one of us will be down there doing it. So, but, you know, I'd like you guys to consider it. You don't have to give us a decision tonight. You can come back and let us know later, but we just wanted to come tonight and meet with you and let us know how we're feeling. And you guys can get back with us and let Mark know. He's the one who's the chairperson of the committee, and we'd be glad to get anything what we could get from you guys. Any other questions, anybody else for myself or Mark? And we'll let you guys go to 10 o'clock.
I just want to say it looks awesome right now with the sunlight.
Yeah.
You're looking
It's
right
a
out the
beautiful
window there.
sight.
It's, you have perfect light out there right now.
I know when it was on land, it looked like, wow, this thing is huge. It still looks wide this way, but when it's on the shore this way, it looks thing, but yeah.
Is there any to be completed services that Lowell Power could donate, like man hours towards?
Well, I'm not sure on that. That's Steve. I know Steve was involved just recently with the city manager, talking about some funding, and you guys put an estimate that it's gonna be around $29,000 a year for electrical services?
Yeah,
Was that part of it?
That's just the
General cost, yeah.
electric bills.
Bill, right, exactly,
There's gonna
would
be
generate.
upgrades to the actual service, new transformer, et cetera, that will need to take place, and I'm sure that's part of the total cost that has been estimated or is known for the Showboat, that 3 point whatever number.
Yeah, so,
So there is time and materials Lowell Light Power will have to contribute or bill for, one of the two, or a combination for the service upgrade.
and you'll be doing that too. Wolverine General should be getting all the permits and get you guys to do
Sure,
the cutovers
sure,
and
yep,
stuff like that.
contractor.
Yep.
is that a number that you can,
I'm gonna have to get with Ryan about that number, and I don't know if he said he might not be on the call till 6:30
no, that's
or
fine.
7.
I mean, it doesn't have to be tonight, but I guess, if you could get us, that number, we could simply look at, time and material type.
Ryan, are you on the call and able to, I mean, we don't need an exact number, but maybe you can better describe what we need to do and when? I don't think he's on yet.
Okay.
Well, you guys can get back with us, like we said, it's not a decision tonight. We got another hard 30 days, right, Mark? To put this together and come up with what we're gonna get done, and so we're looking forward to it. But,
So do you have a deadline that you're working toward?
well, it's gonna be an ongoing. We need to get the money, and we gotta get there. So it's gonna be a continue. The bricks that Mark showed us at our last meeting, you can donate a family brick. They're really, really cool, and how much engraving you can get done on those. It's, it's pretty nice, So,
the brick campaign will start November 5th.
yeah.
Right now, we're coming to the organizations in the community asking for them for donations.
Okay, other questions?
I'd like to say something now.
Yeah.
That what you see on the river, Perry, you know, the ship's already sailed. We just have to wrap this up. There's no return on what we got. We can't just tell Wolverine, well, we're short, we might as well just haul it out of here. That we're already there. So, and we're just so close to being finished. And that's it. And this is the deal though. I know that when it comes, well, when this will come to a vote, I'm gonna opt myself out. Because I'm on that committee. That's how I feel. I'm not, that's not a fair vote, you know, that I should bring to the table for this board. But I do wanna say that, this Showboat, when we took the old one out that Ivan lovingly put together, the whole town came in with pitchforks and torches, and that was a part of their legacy. They wanted it to return. The reason why that they're coming to the big hitters is because market-wise is we've got to give Lowell&P the first chance to put their plaque someplace on the wall. Before Joe Schmoes or somebody's family accumulates their money together and they put their plaque on the wall, and people are walking through going, well, God, you know, here King Milling did, where's Lowell&P? Where's, you know what I'm saying, all these entities. That's what they're doing right now. They're giving us a chance for Lowell&P to put our mark on the wall. That's never gonna come down. And I think this is very important for Lowell&P to have that, you know, that signature on the wall somewhere on that boat where you guys can look at where it needs to be. You know, I'm not asking you guys to give us $100,000, but just give us, you know, a little bit of, you know, seed money so that we can move it along. But I personally would like Lowell&P to have a, you know, plaque on a wall somewhere saying that this was donated or what have you, that we were part of the big hitters first. So that's all.
Yeah, and I think with that, what we're looking at is this is for the future. Anybody that's 50 and older have probably some fond memories of the Showboat. What we're trying to do is keep those memories alive for us older people, but we also need to start it with that new generation, the people that are 25, 30, 40, as they continue to live into this neighborhood, and get that going too. So 50 years from now, Perry will be 117 in November, I think, he's got a birthday coming up. I'll be
Yeah.
67 on Friday, tomorrow, so I'll be 117 years old, and we'll both be sitting over there remembering 50 years from now what we did to make that success. So
Definitely.
that's how I
And in
feel
this
about it.
COVID times, it's perfect, it's really perfect timing for us to shine somewhere. So,
Yeah.
that's it. Thank
Besides
you.
the light in my house, you guys keep that shining, please.
That's right, thank you.
Yeah. Well, thank you for your time. We'll let you guys get back to your meeting, and we'll look forward to hearing from you, gentlemen and
So-
ladies.
I would propose that we find out that number from Ryan and everything, and that we put it on as an action item at our November meeting.
Deal.
Okay.
Can do.
Okay.
I'll talk with Ryan.
Okay.
Thank
All
you.
right. Thanks,
Thank
guys.
you.
See you, Jim. See you, Mark.
Hey, good luck. Yeah.
I'm gonna put a girl of water here. You didn't grab a sandwich, Jim?
I forgot what kind. I'm not even going to ask what kind. I'm just going to grab
Please.
Ham, turkey. Ham or turkey?
ham or turkey. This must be the turkey.
Yeah.
All right. Thanks, guys.
See ya.
I wanted Steve's, so, what was that?
Italian B&T. It was tasty. It was good.
No problem, Steve.
I told Sharon I wanted a custom sub. Good to go to the next one?
Let's do it.
All right. Peter Hafner from Benevolence Hafner is with us this evening. Peter and his team recently completed Lowell&P's fiscal year 2020 audit. As a reminder, our fiscal year runs from July 1st through June 30th, and the audit must be conducted, approved, and then filed with the Michigan Department of Treasury by December 31st of every year. So as Peter has done for the past several years, he is here tonight to give a overview of the audit. He has a brief presentation. I have some slides in our packet,
Yes.
and I'll turn it over to Peter.
That presentation, or
I can go to what?
with the commission or whatever, that's through the city, right? I mean, do we,
Our audit ultimately is filed within the cities.
Right.
Well, our financial statements are, but we actually do have a separate audit, and there are various
Right.
places it goes. Yeah.
okay,
So, Peter,
Thank you, appreciate the opportunity to be here, and if I'm not speaking clearly, let me know, and I'll take off my mask, but otherwise we'll stick with it for now. My name's Peter Hefner. I'm really here to answer questions that you might have. I want to point out the highlights of the audit this year, and the first thing that you see on the screen is our communications, and we provide this letter each year. It's required under generally accepted auditing standards, and it talks about our responsibilities and your responsibilities. It talks about whether we had any difficulties performing the audit, and we did not. It talks about uncorrected misstatements, and there were none. And there were not significant adjustments that we brought to your attention. Talks about disagreements with management, and we didn't have any. We had lively discussions, of course, because there's accounting issues involved, and we're accountants.
and Peter and I just like to debate.
Yeah.
I will miss that, Pete.
In general, this letter would typically identify opportunities for you to improve your system of internal controls. So on the second page here, under other matters, typically in a typical audit we would have identified, here's a couple things to look at. Perhaps you could modify the processes to improve the process. We don't bring that to your attention this year. During our audit, we look at your controls, and we didn't identify opportunities to improve those controls that were cost effective. Sometimes we might say do this slightly differently to management. It's not something that we would bring to your attention. So I would refer to this as a boilerplate letter. It really just talks about your significant estimates and what we understand about those estimates, such as the estimate of your pension liability, the estimate of your OPEB liability, estimate of your collectability of your receivables, things of that nature. So a boilerplate letter for our communications required under generally accepted auditing standards. After that, I want to talk about the audit report itself. And if you go to page 1 of the audit, that's where our opinion begins. And I always like to point out that the financial statements are the responsibility of management. Your staff provides us with a well-adjusted trial balance, supporting schedules for the balance sheet accounts and income statement accounts, analysis of your margin on sales. Basically puts together a nice package, and this year they provided that to us before we began the audit electronically. We did come on site and conduct much of the audit here, but we were able to prepare the statements before we got here. We were able to select transactions, so that helps us keep with the spirit of minimizing contact. And the process went very smoothly from our perspective. It has for the last number of years. So it's a very, I would say, expectable audit process. We're not helping fix things that we weren't expecting to be incorrect. We typically come out and audit your numbers. Your numbers are in the financial statements. Megan, Julie, Steve, and your team do a nice job of putting together all the information. At the bottom of our opinion, it's the opinion's 2 pages long, so I'll just summarize on the bottom of page 1. It's our opinion that the financial statements present fairly in all material respects the financial position, results of operations, cash flows of Lowell&P for the year ended June 30th, 2020 in accordance with generally accepted accounting principles. That's the highest opinion you can receive. It's that you're following the standards that are required to be followed as identified by the state of Michigan, but also by the Governmental Accounting Standards Board, which is the standard setting body for governments. So that's positive. I want to point out, if you would scroll ahead, Steve, if you would go to,
You let me know and I can get us there.
yes, if you would go to the statement of cash flows, which is approximately 5 pages in, here we are. I just wanted to point out some of the highlights that don't show up in the slides. And if you look at the cash flow from capital and related financing activities, that shows you how many dollars were invested in capital, which can be cable on the pole or buildings or improvements to your generation facilities. Nearly $2 million worth of investment in capital this year. In addition, you can see the substantial payment of debt, approximately $600,000. Those two highlights won't show up in the revenues and expenditures because those capital assets get depreciated over long lives, 20 years, 25 years. And the debt service doesn't show up as an expenditure, the principal payment that's displayed there. So I thought that would be an important addition to the slides that we look at. In addition, if you go to the balance sheet, 2 pages back, or the statement of net position, one more please. I just wanted to point out, this year there's a new liability being reported, and it's referred to as an asset retirement obligation. And so do you see where the long-term non-current liabilities are? And right in the middle of the 5 lines, there's something referred to as an asset retirement obligation. That is included on the balance sheet as a liability, and this is the first year that such a thing has been reported. It's related to a new GASB standard that you implemented this year. So that liability was recorded as a liability, and the other side of that entry was directly to your equity. That's what the accounting standards say to do in the first year of recording an asset retirement obligation. That's your share of what MPPA is reporting for the asset retirement obligation for Bell River and Campbell plants. So last year, I had another electric utility client that implemented this standard a year ago. But in your case, consumers didn't have to implement it till last year, so MPPA didn't pick it up till 12/31, therefore you don't pick it up till this point in time. Now going forward, that number will fluctuate. As they clean things up, it could go up or it could go down. It's your portion of the liability MPPA is putting on their books, calling it an asset retirement obligation, based on your participation percentages in those plans, just to have an understanding of what it is. At the end of the notes to the financial statements, it talks about it. But it's new for this year, and I thought it was worthy of bringing to your attention.
Mind if I chime in as well?
No, please do,
We
sir.
recently talked about this exact liability yesterday as part of the monthly MPPA board meeting. There's just such uncertainty with politics and, the governor's recent, carbon neutral 2050 goals, that they may be accelerating, the retirement of coal plants. So the MPPA will start collecting like a project account fund to fund like our future cleanup costs. These will be billed to us as a separate line item in our purchase power bills, whether it's the Campbell invoice or the Bell River invoice over time. And as we pay these bills on a monthly basis, it won't hit our expense, it'll hit the reduction of a liability. So this number will actually be decreasing month to month going in the future, starting potentially in 21 or 2022. But it'll be collected over a 5 or 6 year time period. So like the monthly cost, might be $1,000, $1,500 here or there. So it's not like we would pay this all at once, if that makes sense.
And this asset retirement obligation under governmental accounting standards relates specifically to when you have a operation, could be a nuclear power plant, electric plant, a plant that by its very nature is going to perhaps contaminate the ground. That's related to perhaps the coal decks and the ash ponds, the settling ponds at those plants. Doesn't necessarily address at all the cost of tearing those plants down. There's no requirement to tear them down. So it's likely less than what it would cost to totally, clear down the place and make it a park. It's more related to just the components of the fuel deck, the coal deck they call it, and the ash settling ponds. And if you take a look at Consumer's report, you'll get more information on it. It's not in great detail. Under governmental accounting standards, it would only relate to those components. I have another client, they're in the process of addressing this issue and taking down a plant. The asset retirement obligation is all that's the liability that needs to be recorded. Any tear down of the building or things of that nature are generally expensed as they go. So this will cover some of it, but it's possible in the case of Consumers, there's more there to remove the plant itself. And there's also an offset of the value of the materials in those buildings, so depends on what you have, but there's a very valuable steel and resources, copper and those things that offset those costs, but I wanted to make it clear what we're recording here.
Thanks, Pete, that was really good.
Is that just assessed and adjusted annually?
Yeah,
They're pretty ballpark estimates. We talked about that actually specifically with Detroit Edison in Bell River. I think the number that they have for Bell River was obtained by using a 2018 study of other coal plants or other fleets that have been taken down and
Yeah. Something
extrapolating it or trying to make an apples to apples comparison for theirs, but
I'm just saying, if we keep paying it down for the year, you see it just come down as.
MPPA is going to be hounding DTE specifically to try to hone in on an exact number, a tight range, so that we're collecting the right amount from members, which we're one of the members.
and that makes sense that you're gonna actually start putting some of those dollars aside, so you're really moving the liability from your books to the MPPA books, because you've funded it over the next 5 years or what have you. So that's the only change in the accounting standards this year. But the big investments were capital, repayment of a substantial amount of long-term liabilities, and the one additional note that would relate to the asset retirement. And that's at the very end of the notes to the financial statements. I think if we look at the slides, we'll see the remainder of.
One other clarification
sure.
I wanted to make. Peter mentioned that we paid down, almost $600,000-ish in debt between interest and principal. This does not include the debt that we pay for Campbell or Bell River or Kalkaska, because that debt flows through as an operating expense, as like a purchase power operating expense.
And there is a long note in the financial statements that talks about your commitment for those.
Yes.
And it's something that I didn't even really think of bringing to your attention, but I did at one point in time, but I should every year. Your ownership through MPPA of these plants is not reflected on your financial statements. So the asset side is not reflected, nor the liability for the debt. There is a note that discloses this and says you don't actually have an equity interest in those operations. That's just based on the accounting standards.
And even if the asset had been recorded all this time, we'd likely have to impair it to
Yeah.
zero because coal plants are going away. So we've just socked, how many millions of dollars over the last 20, 30 years in these assets. Well, now the plant's going away, unfortunately, or fortunately, depending how you look at it.
Yeah, it's generally shortly after the debt service is completed, they will close the plant.
Yes, of
Or
course.
they can do a big renovation and you're back on the debt side. But that is just reflected on your financial statements in the notes, and the fact that much of your payments to the MPPA, and we'll see them in shortly, is for debt service or for operations, the actual cost of fuel and running the plant. But yeah, debt service is a big portion of those costs.
You want me to go to your slides?
Yes, if you would, because the remainder of the information is somewhat reflected in the slides. So here's just a picture of your operating revenues and operating expenses after your payment in lieu of tax. That payment in lieu of tax is the payment to the city based on your charter. And it does not include non-operating items like interest income or interest expense, but a big picture look And this year, you can see that your operating expenses, after considering that payment in lieu of tax, were actually lower than the prior year. Revenue is very consistent with the current year, which is a little different than some of the other utilities I was working with. Many of them experienced a decline because of the industries shut down during COVID. Where in your case, you had essential industries that just kept running, for the most part. I mean, if you look at, I believe, King Milling, you know, things of that nature.
Meyer?
People must eat. This is a picture of your operating expenses, including that payment in lieu of tax, and this just shows the largest portion of your expenses are actually the purchasing of power, either from Bell River, Campbell, renewables, and we'll have a slide on that. Then after you consider, you can see that there's unallocated / administration. All the benefit costs are in there across all the cost centers. So that's why that's a little larger than you might expect. The detail is in the back of the audit report, but you'll see the change in your pension liability, your other post-employment benefit liability, which went in a positive direction this year, are making up that total, as well as just general administrative costs that don't get allocated.
So,
Yes?
this is a question. So the I'm just trying to, maybe I'm colorblind, but the 5% is the pilot.
Yep, that's the
It's probably
payment to the
rounding
city.
to
It's
4.5.
rounding up, because we're at, what, 4?
It's 4.5, it's
Right.
just
Okay,
rounding.
I just,
Yep, and they're all rounded.
okay,
If you go to the next slide, this just gives you a picture of those expenses over time, and you can see what's actually happening with the cost of your purchase power. You're buying more power and you're actually getting it for less. With the remaining costs, for the most part, being very consistent year to year. And this picture shows you what the cost of your purchase power are, and if you take a look at the very right, 2020, you'll see there's two new bars. This year we've broken out the costs of your energy service project, you're buying per market power, as well as your renewable purchase. And in the previous year, they're in that black line. So you can see back in 12 where it wasn't a large, you see in 2012 where the darkest line was quite small. You can see that you've increased your purchase of power, but not through Campbell or Bell River or the gas turbine or combustion turbine, but more through the renewables and then also market purchases because the need for power. And so going forward, we'll keep those other two bars, and maybe some of those will come off, you know, just because of their significance. But this year, it is a different presentation, and I think that's definitely appropriate. That was suggested by your staff to break that out going forward.
So you can clarify the energy service project, what that means?
So our day ahead and real-time purchases of power
Okay.
and any bilateral transactions. So anything we're not buying through our entitled resources or purchase power agreements flows through the ESP.
Okay.
And then if you take a look at the next slide, this is just showing you a change in the bottom line year to year. This year was a good year, but when you looked at that cash flow statement, you can see you really invested all of those dollars and some in capital and in debt service. And this is just reflecting the net revenues and expenses. The capital will be an expense when it's depreciated, as will the debt service. The principal portion will never be shown as an expense. So this gives you the ability to pay down debt, invest in capital without going to the debt market. That's a positive thing. And things fluctuate from year to year. You know, there's a shortage of wood now, I understand. Well, when there's a shortage of power, expect to pay more. So you have to be prepared for that situation as well. From my perspective, and I was here working on your audit, I think it went very smoothly. Enjoy working with your staff. They have everything put together. We probably asked for things about twice. They'll provide it to us. We won't realize we have it and we'll ask for it again. So they give us so much information at the beginning, it would probably be worthy of us, and we talked about doing this, is to study everything we have, because oftentimes we have it and we ask. So we try not to do that, but that happens, and we appreciate your staff's patience.
Just on on this chart, to clarify, that's the end of year plus minus for each of those years?
Yes.
It's not a rolling total, right?
Right. So, in you look at 15, you made about $1 million, in 20, you made about $800,000. And typically what happens is that gets invested in capital. Capital becomes more expensive each year, so if you don't actually add to your net position, you're likely going backwards. Because capital is more expensive than it was when it was depreciated. You replace it, now it's 5 times as much, so. But yes,
Okay.
that's a single year change. You had years where it was approximately break even. And in the last few years, it's been better than that. And you take a look at the purchases of power, you can see where some of that comes in. The purchase power has become cheaper. For now.
For now.
And to a large extent, that's due to the fact that you've locked things in going forward and you're able to buy with a large group and some of those big positives. Are there any questions I can answer about the audit process or the document itself or any of the communications? I'm sorry it went so long too.
Well, on behalf of staff, I do want to thank Julie and Megan.
Yeah.
I had very, very, very little, if anything, to prepare for the audit. Really, at this point, Julie and Megan do almost everything related to the preparation of monthly entries, payables, payroll, inventory, all of those various things, financial statements, and then the audit process. So, just want to let the board know that it really was Julie, Megan, and their staff that made the audit a success this year. So, anyway, that bodes well for my transition out. The board knows that the staff we have here can handle this process without me, which, 3-4 years ago was not the case. So, anyway, I appreciate it, Peter.
Thank you.
very
Thank you.
much.
Appreciate the opportunity.
Thank you.
Thank you.
So I would entertain a motion to accept this audit and then we will present it to the city council.
I'd like to motion to accept this audit.
I'll support.
It's been moved and supported. Any further discussion? Hearing none. All those in favor signify by saying aye. Aye. Opposed? Motion carried.
I really like the part when he said there was nothing they could suggest to do better.
Well, and I like the part that it's not just, we cross the shield that we get all our information in, and I fly it out, and then they come back and go, well, what about blah, 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 and I'm thinking, hi. But I had to look through pages and pages and pages, it's like, yes, I gave this to you, but I don't know if it's more work looking at what I sent them out, or just, why don't I just go to my zip file and pull it out, it's more work to try to prove somebody wrong.
Sometimes we
That's
get.
where I'm at, that's where I'm at.
Yeah, sometimes we get so much information, it's hard to know what it would be called or things of that nature.
Right.
I help a large city of 80,000 people get ready for their audit, and we have everything labeled, and we still get questions from the auditors. I'm not the auditor there, I'm the get it ready guy, and so I think it's always, because you don't work with it on a daily basis, I always feel bad if I ask for something, oh geez, I already had it, so. That happens. Not on everything.
It's always great having you, Peter. We love it.
Thank you.
Can I ask you one more question, Peter?
Yes, sir.
I was wondering, maybe I missed it if it was in the notes. Was there a discussion on doing a COVID note, a footnote for COVID, just to?
We did
It was a significant
notes on
impact.
COVID to begin with. This was early on, and at this point, we're not putting a COVID note in there because it's obvious.
Okay.
What we were putting in there, the market has collapsed, or
Yeah.
had a severe decline. We don't know what's gonna happen yet due to COVID, but at this point, we're not putting a COVID note in any of our audits. We were.
Gotcha.
We've stopped just because it appears to be obvious at this point in time. There is a problem.
Okay. Good, just wondered.
Sure,
That is
sure.
curious. COVID.
Cool.
Well, thank you so much.
Yes, yeah, you're welcome.
Thanks, Pete.
I will leave you.
I'm sorry this is your last audit with Steve in the chair.
That's okay, there's,
Now we can go grab a beer or something.
That's
yeah.
right.
No conflict of interest. See you, Pete.
Yeah.
You good, Perry, to move to the next one?
Mhm.
All right. As requested, per discussion at last month's meeting, staff, really Ann and I, and we got some input from Julie and Megan, drafted a paternal leave policy. As a reminder, Lowell&P currently does not have a policy. And we're just guided by how much PTO someone has, and if somebody would qualify for short-term disability, and if somebody would qualify for unpaid leave, utilizing FMLA law. So in your packet is a policy. This is our first crack at a draft policy for paternal leave. You'll notice there are numerous blanks within the policy that we really are looking to the board to provide feedback. We don't want to assume too much. I was pleasantly surprised by some of the discussion that the board had last week in regards to the generosity they discussed. How long someone could be potentially on paternal leave. Our concern is we are a small office, and while nice for the person that is off for either the birth of their child or the birth of their spouse's child or adoption, it does put everyone else in the office, they're gonna have to gear up for a little bit. So I just want the board to keep that in mind, that I don't think we can do 12 weeks or 10 weeks like, maybe a Fortune 500 company or Harry's son-in-law gets out in Colorado. So let's just keep that in mind. And the other thing that Julie, our office manager, felt should be included in the policy is a repayment section, just because we would hate for someone to go into a paternal leave knowing they're not going to come back, take 4, 6, 8 weeks of pay, and then say, oh, I'm done. And then Lowell&P just handed out thousands of dollars and everybody worked. So if somebody wants to receive the benefit, they're gonna have to at least come back and work for a period of time. And we have this for education type of benefits. We have this for lineman apprenticeship school, things of that nature. So have to give Julie credit for that. But we did think about this a lot. And I'm not gonna go over all the nuances, but we thought about the words, or whether it's child or children, and the number of births, etc. So we did spend, especially Anna and I, significant time reviewing and thinking about this. But I would love to hear from the board about the policy, and then transition our discussion to, what percent of pay for how many weeks, assuming this is something the board wants to move forward with. So. Do you want me to highlight the policy, or I didn't know if everybody's read through it or not?
When I was reading it before, I was trying to figure out, there's a few things that were, there's the leave would be concurrent with FMLA, so that means that
It's running, both are being used at the same time. So if you're off.
okay, so if you have you're allowed X amount for FMLA, and it's a smaller amount of paid leave, they both start on day one. Okay.
Yes,
So basically you're getting, in other words, our policy would pay you for the first X amount of FMLA. So to speak.
Exactly. So it's not like the first, maybe, let's say the board
Yeah,
gets
then
4 weeks. Well, after that, there's an additional maximum amount of time out.
Yeah.
You already used that first 4-week portion of your FMLA.
Okay.
That's what
I think that's
means.
typical, right?
I believe so, yes. Anna wrote this, and I do believe that's typical.
And then, what's the second bullet mean? Women not restricted to work.
by their physician.
Right.
So if somebody has a complication, or if somebody would qualify short-term disability, where their doctor actually says there's restrictions for them to come to work,
Yeah.
they would have to apply for short-term disability. If there's no restriction, where, hey, 3 days after their birth, or 2 days after their birth, you could go back to work, theoretically, in your job.
Okay.
That would be bullet number 2, where there's no health restriction where they couldn't do their job, if that makes sense.
Okay, yeah, so the wording of it confusing, it says not restricted to work, and like, why would they be restricted to doing work?
Yeah,
So I
if
see
you
what it
played
does.
on number 1, and maybe we
Yeah.
cross-reference the previous bullet, you know, restricted to work due to conditions pertaining to the previous bullet point, or something like that.
Well, wouldn't they be restricted to not work? Whether it's not,
Yeah, I mean, you
I
can
guess
say it
that's
either
kind of how I
way.
was reading it now, so that's why I was a little confused, I mean, I figured.
Even without work restrictions.
Yeah.
We can revise that, so it's
Sure. Sure.
restricted not to work, or
Okay.
with or without.
Yeah,
I
it took me a
understand.
while reading through it to kind of realize that I think, like you said, the first bullet basically means if there's a medical issue or medical complication, then they would have to use the STD for that. And then if they're looking for leave, then that's what the second bullet is for.
Exactly, we just wanted to be clear that we're paying in full for a disability policy, and if they qualify for leave under that disability policy, they have to go through, and because there's work on their end to go through that process with a doctor's statement, an employee statement, and follow-up information and taxes, that they have to first go through that process before we just say, you can forget it, we'll just give you the leave that's paid.
So the third bullet then is for, okay, so the spouse or partner, I guess.
It's been possible that the second and third bullets could be combined. We didn't know
Okay.
if the board would want to have the same benefit for both child bearer and the spouse or partner, or if they'd rather have one be 6 weeks and one be 4 weeks, or one be a 6 week with 75%, and one be 6 weeks with 60%. You know, if they're the same, we could either combine this or keep it separate, just so if they ever want to change it in the future, we already have that language. Or just, it's clear that we thought about potentially it being different, but we kept it the same for now.
Aren't they, I guess, I don't know what's typical in, I think, well, actually, that's typically the same.
I would
You get the
prefer,
same.
I'd prefer it to be the same and not get into, oh, you got this, and, I mean, I just, my preference would be to keep it the same.
That is the
Yeah, so-
feedback we received last month,
I
and I
agree
was
with
gonna
you,
mention
right,
that, but
yeah.
I just, we
Keep it
still
right
spelled
across the
out,
board.
we could easily combine these into just one.
I think if you don't keep it the same, it's a nightmare. It's a
Right.
nightmare waiting to happen.
Yeah.
Because there's so many different ways a family can work that
I
we
guess-
might end up having to look at the policy a little bit too,
Sure.
a little too much, and it might bite us, so I
Okay.
agree.
Plus, I think even if there's a different percentage, then it's kind of, there's that question of, well, then why is there a difference, you know?
Right,
Whoever-
especially if you want
whoever's
men
here
and
because they
women
want
to
a
be
job
equal in the
for- yeah.
workplace, and now we're not treating them equal.
Yeah.
Right, right.
So, I'm in favor of them being identical. The other would be, so, I'm either, full pay for the 12 weeks, or or full pay for 8 weeks, 60% for 4 weeks, for the total of 12 weeks. Just, I'm just one person on this, I'm not, go with what everybody else feels. But so, I had a couple, and it's that, but then also in the repayment.